Hi traders, it's Jay with thetraderinstitute.com. Just want to remind everyone that futures, forex, and options trading is risky and you can lose money. Therefore, you should only trade with risk capital. Please consult your financial advisor or investment professional before making any investments in futures, forex, or options. No guarantee of income or solicitation of futures, forex, or options or any other financial instrument is being made in these videos. Alright, I just quickly wanted to mention we're having a 2-for-1 special until Friday midnight, April the 29th, 2016 for the premium package. That's mentoring, live trading during the US session, and comprehensive training and support through that premium package. Now normally it's $8,900. We're doing a 2-for-1 special, so it's going to be $9,000 for 2 people. It's $4,500 per person. We've also done something. If you don't have another person that wants to come in with you, we will match another person with you, so you can still benefit from that 2-for-1 deal. We have a 5-day money-back guarantee, and you can secure that guarantee. You attend 5 morning sessions, and you get full access to the members area, correct way of reading and trading volume profile. You get to learn the ACE methodology, how we do longer term swing trades, shorter term scalps. You get 12 months free access to the morning and afternoon trading sessions. Okay, after the 12 months it's $299 a month. You also get 12 months free access to the Asian session, which is this session, which is also $299 a month after the 12 months. We'll also include the dynamic reversal levels indicator, the power line indicator, and the price magnet indicator. So you can sign up just by clicking on the 2-for-1 special there. If you don't have a PayPal account, you can use your credit card and take advantage of this limited time opportunity. Take care everyone, and good trade.
All right, so just a quick review of what happened yesterday. The 27th, which was a Fed day. One of the interesting things that happened is right around the London Open, we got a nice move off our level here within a tick at 2087 quarter. You're funny, Zach. And that brought us straight down to our other level at 85. Couldn't get back up. Right back down to 85, pushed through it a little bit, sorry, 82. Back up to, this time to 85, and then back down to 82. So even prior to the US Open, the levels were still doing quite well, bouncing around this area between 87 and 82. More bounces around it. And going into the US session, we said yesterday a major level would be 80 quarter, and you can see right around the US Open, boom, we went up, tried to test the London highs, which were again within a couple ticks of our level at 87 quarter. Couldn't quite make that, came down, tried to go back up again, 85. You can see multiple touches of the level at 2085, and then back down to 80 quarter for a bounce, and then we pushed through 80 quarter. We didn't have a level until we got down to 74, but we didn't quite make it there, and the market retraced first to 84, back down almost to 82, back up to 85, back down within a tick or two to 80 quarter, back up to 84, and then the obviously the Fed minutes came out, basically just trying to test the low that was established earlier in the US morning session. So from there, we shot up right after the news. And where is the first place we get a major reaction? The major level we had anticipated, which was 2090. So looking at the US Open and after the Fed, not including all the other times that we bounced off levels, you had a major opportunity here right at the US Open, okay, from 2080 quarter. That in and of itself, if we just measure from 80 quarter to where it was at 86.75, you're looking at 6.5 points potential there. And then the major reaction as well, it came within two ticks of our level up there. So from that level at 87 quarter, from the actual high at 86.75, well, we went all the way down to 76 quarter. So over 10 points available there. And then the major level off of 2090 even, back down to 84, another 6 points available there. So plenty of opportunity, even though we did not pick the low of the day. We didn't get that this time. We were within a couple points, so about 8 ticks. But we didn't really get that. But we did pick major turning points, such as 80 quarter and 90 even, as well as those levels in between of 87 quarter and all the action that we saw around 82 and 84 and 85. So going into Thursday's session, I still expect to the downside 80 quarter to be a major level. We've added and adjusted some levels here, such as 88.57. I expect 2091 to be a major level. But I think all downside action will be contained above either 2080 or 2074 quarter. To the upside, on the assumption that we keep going, the major two levels that I see would be 2105 and 2100 quarter. We also have 2097. Okay, so that's what I see to the upside. If we do manage to get above 2105, then the market is going to start to make much more significant highs, and I could see us going all the way to 2170 over the next few weeks, or sooner, depending how quickly it moves. So that's what we see on the ES going into Thursday. All right, so crude oil. Again, levels performed quite well yesterday. We called 45.20 during the Asian session, and before the US Open during the London session, we actually came up within 2 ticks of 45.20, and from there, big sell-off after the US Open. We did play around here for a while at 44.84. Did play around that level. So both those black levels, there were significant reactions off them. Reactions to the upside, and then from the 45.20 level, reaction downside. Couldn't get through right at the oil open. Got back above 44.84. Did get a reaction off it again when we came into it. Couldn't get any higher, and then we broke through, and that was a huge move. It did blow past our level at 44.28, and then pushed our level at 43.95. We said 44 04 and 43.95 would probably be significant because they have been over the past few weeks. But it did press those levels quite a lot. But once it got back above them, there was opportunities here and here at 43.95 and 44.04 levels to get on the long side. And then once it got above 28, which we had as a black level, major level, market continued up. And where do we get the first reaction? Well, there it is, 44.84. The market moved significantly down from that, back down to 40. So it moved about 40 ticks from that level. Couldn't get down to 44.28 again. Instead, it launched back up. And interestingly enough, we had 44.51 as a major level. And so, when you're testing the London highs, which was 45.18 or 17, you'd expect a break through that, either a complete respect or a break through it. And then broke through it after the Fed, obviously. This is all this action here from that low there. That's after the Fed. So 45.51, it's actually not a bad level. As when we got below that, you can see the market reacted, and now we're just sitting respecting this 45.22 level. So on oil, prior to the Fed, the performance was quite good, and even after the Fed, once we had the first initial spike to push us higher, 44.51 or 45.51 actually turned out to be not bad. Oil's more volatile, so sometimes you get pushes through the levels of 5-10 ticks, and then you'll turn around. Sometimes they're still within to the tick or within a couple ticks, but oil is a little bit more volatile. But the performance is still pretty good, especially on a Fed day. All right, so on oil, I would expect all downside action to be contained between 44.75 and 45.04. If for some reason we were to get below 44.75, then I'd be looking at 44.02 and 43.95 as major levels to the downside, but I think we should stay above 44.75 and 45.04. To the upside, obviously, first major level, we adjusted it slightly. Now it's 45.54. Above that, if we can maintain above 45.54, I expect 46.04. And if this is a major, these are two major levels, two major potential points, 45.54 and 46.04. If we're to get above 46.04, we will probably see 47.21. Okay, and I've got that on the chart way up there. All right, so that's the outlook for oil.